So most farms in the United States lose money.
This is generations of farms teetering on the brink.
And that's not just me making something up. That's like a fact that comes from the USDA, where according to the USDA data, 57% of all farms in the United States lost money. And that's not just like a one-time off-year type of thing, or like we had droughts or problems with trade with China.
This is a crisis that's been building for decades.
And I know most of you guys are hearing me say this fact and wondering, well, how does that happen? Like, how does our food system not just up and collapse as a result of that? I mean, if you had a coffee shop and that coffee shop lost money every single year, you wouldn't be surprised to find out that that coffee shop suddenly went out of business. Yet meanwhile, most of the farms in the United States of America continuously lose money on an annual basis, yet they're still around and they actually are becoming even more valuable than ever.
If somebody is desiring land, it is primarily people of wealth who can afford it.
What I want to share with you today is a very detailed and thorough explanation around why most farms lose money and how and why most of those farms are able to still survive, and how and why we're still able to eat, and why does the United States of America continue to allow this to happen. Like in today's video, I'm going to explain all of this stuff to you, so buckle up.
You're not a farmer, and you're certainly not a businessman.
Chapter 1, the $1,000 Mirage.
Hi, my name is Sharifa Williams, and I work for the USDA's National Agricultural Statistics Service. The USDA defines a farm as any place for which $1,000 or more of agricultural products will be sold.
Here's an important fact that quietly governs almost everything that follows in this video. By USDA definition, a farm is any place from which $1,000 or more of agricultural products are produced and sold. So for all the haters out there who say that Goldshaw Farm is not a real farm, we've usually made somewhere between like 15,000 and just a little bit under 20,000. And so by that USDA definition, we absolutely do, because even if you look at our revenue numbers, they're well above what would be that $1,000 threshold. You know, that farm definition covers everything from somebody who's growing microgreens in their basement in Brooklyn to a 10,000 acre grain operation. Like, both of those fit under that USDA heading of farm. And it lets that USDA census take a true snapshot of American agricultural activity as it exists, not just as we romanticize it, or as we might say, this is what feels like a farm. But I think the problem with that definition is that it also means that the word farm carries multiple realities all at once. You know, it means a small number of very large commercial operations that produce most of the country's food. But then it also means a massive number of small operations that really aren't designed to provide a living from the farm sales that they create. It also leaves a middle category that survives by stitching together household income, land equity, policy, tax strategies, and debt management strategies. And so in that 2022 USDA census data, you know, it really makes the concentration plain. Farms with $1 million or more in sales are about 6% of the farms out there, yet they sell more than 3/4 of all the United States' agricultural products. Meanwhile, farms with $50,000 or less in sales are roughly 3/4 of the farms out there, and they account for a very, very tiny fractional share of total farm sales in the US as well as even outside the US. And so understanding this is the first key in the puzzle of understanding why do most farms lose money. It's because most farms does not mean most food. And it also means that the American farmer, you know, the one that you picture when you hear the word, is almost certainly not the representative of the sector that's feeding you and your family. And I think that matters because so much public argument about bailouts, about farmland, about virtue, about collapse, they all begin with this narrative and assumption that the category itself is very clear and coherent.
We're going to be giving and providing it to the farmers in economic assistance, and we love our farmers, and they're great people. They're the backbone of our country. $12 billion in economic assistance to American farmers.
But when you look at the data, it is actually anything but. Chapter 2, the two ledgers. Most arguments about farm profitability accidentally mix up two different ledgers. There is the farm business ledger, Really something that's answering the question, did the operation make money from farming this year? And then there's the household ledger. And it really is asking the question, did the people running the farm have enough total income to survive? And so when people hear most farms lose money, they picture the Joad family being forced to have to hit the road after losing their land to the bank and needing to escape the Dust Bowl. But that's 1926. That's not 2026. In 2024, median income from farming for farm households was negative. It was about $1,800 negative. But then for those very same households, the median off-farm income was nearly $87,000. And so the median total household income ended up actually at $102,000, which might not sound right, but when you're doing maths and averages, it actually works itself out. And so to put all of this in another way, the typical farm household isn't living off of its farm profits. The household is often living on wages, non-farm businesses, retirement income, and other sources of income, while the farm itself actually operates at a loss or a near break even. And I'm not saying all of this as a moral judgment. I mean, in fact, if you look at me and my farm, we fall squarely in this category. Like if you're looking at my farm, Goldshaw Farm, which is on 160 acres of land here in the Northeast Kingdom of Vermont. On this farm, we raise cattle for beef, we raise poultry in terms of chickens for eggs, and we raise ducks, and we raise geese for meat. We grow trees that we sell. I guess those are like all the primary farm businesses that we have. And if I look at 2025, our farm made about $21,000 in total farming revenue. And then we ultimately ended up with about $17,231 in gross profit from those farming operations. But that is not like our household income. And so when you look at that, you've got to realize I'm not making the majority of my income each year from the farming operations. I'm making it from making videos like this one, from selling merch, from things like writing books, like my brand new book, Dirt Rich Living, which is on sale right now, and you can probably find the link for it down below. And then on top of that, my household isn't just me, it's also my wife, who works as a nurse practitioner at a local emergency room at a hospital. And so the two of us, as our household, are earning a significant portion, the vast majority of it, from what would be considered off-farm income, which makes us almost exactly like most other farms in America. So like I said, this is not a moral judgment. It's just a structural reality. It's the difference between the farm and the farm household. And so often we just use that farm word to cover both of them, and it creates a whole bunch of confusion. Because really, when you're asking the question, how much money do farms make, you're asking a business question. But then when you ask about, well, what's going on with this farm or that farm, you might be asking a family question, and those are two different things. The USDA breaks this down further by farm type. There's the residence farms, where the operator is retired or primarily works off farm, and they typically show a negative farm income but a substantial total income. And again, even though we actually haven't been negative in our farming operations in more than 5 years, I will say we fall into that category because the amount of off-farm income significantly dwarfs the amount of on-farm income. There is this intermediate farm category, which often shows a negative farm income and a lower total income. And then there are the commercial family farms, which show strongly positive farm income and much higher total household income. And so if you're asking this question, how can most farms lose money and not collapse? The truth of the matter is the question is slightly misaimed. You see, for most farms, at least by sheer count and number, the farm isn't the thing preventing the collapse.
Dear God, don't quit your day job.
You've got to come to terms with the fact that if farm household well-being doesn't actually come from farm profits, then farm income statistics can be wildly misleading when treated as a proxy for how are farmers doing. And you see this happen all of the time in like the media. Like last year when there were all these conversations about farmer bailouts and trade wars with other countries and like all of that stuff was going on, so much of the poster childs and the people who were being put out there to say, we need to save these family farms, they actually weren't the ones who were really ever at risk, or they weren't quite the poor, downtrodden folks that most of us like to imagine the farmer being. And just to prove my point, here are some clips from a news story that was on CBS News a few months back.
I don't believe there'll be a profit this year. I think we will go backwards.
The farmer featured here is Rob Ewalt.
It's an endless cycle that we're caught in right now.
He's portrayed as a down-to-earth kind of guy, a simple guy, and maybe he is, but he also owns roughly $2.5 million worth of farmland, and his farming operation works roughly 2,000 total acres.
This is all I know. Can't do it any better.
Incredibly heartbreaking.
And I genuinely don't think there's anything wrong with this. Based on all the research I did on this one, it seems like he does run a very legit operation, but I have issue with how he's portrayed in the media as this hard luck case farmer, when at the same time his financial assets dwarf the average American's financial assets. And so for me, at least personally, just I guess where my values sit, it's kind of galling to see that narrative get trotted out every time, like various folks and interest groups want to see a bailout from the U.S. government, because it's not necessarily the people who truly need it. And in fact, it's oftentimes helping some of the consolidation in the marketplace that has made farming what it is today. Because, like, for example, if you look at the bailouts that have happened in the last couple of years, they have played a significant role in greater consolidation in the agricultural industries, as well as a significant role in ensuring that land values remain significantly higher than maybe they should be. But then meanwhile, on the ground, there are plenty of small and mid-sized operators who are living a third version of the events. They're facing steady pressure, thin margins, and this very familiar sense that the narrative is about them, but it's not really for them. Like, again, I don't consider myself to be a part of that class, but I've got many friends who I would consider in that space where they are trying to live off of their farm income, and they're having a very hard time right now because they're not big enough to really get the help that they need that a lot of the big guys are getting. Yet meanwhile, they don't have other resources like a farm like mine has to really help stabilize their household and keep their business afloat. And now when you break down who is actually making the money, all of this becomes much, much clearer. And so to illustrate this, I want to show you this chart. Now, if you count farms, you're mostly counting small sales farms. Roughly 4 out of every 5 farms in the United States is producing less than $100,000 in sales. And that's where the median farm actually lives. Now, not to get all statistics teacher on you, remember, a mean is actually the average. Like where you take the total number and you divide it by the total number of participants, the median means you have an equal number above that number and an equal number below. So that's like the perfect middle point. And so when you look at the median farm's world, they're losing about $1,100 per year per farm. But then when you're looking at the sector's average income, it doesn't come from the middle. It comes from the top. Farms with more than $1 million in sales account for only 6% of farms, yet they average about $716,000 in net cash income per year. This is how the average farm income looks healthy, and it can exist along the fact that most farms lose money. And so if you want to write honestly about agriculture in 2026, you have to write in plurals. There isn't just one agricultural sector in the United States. There are at least 2, but maybe you could even argue 3 or 4. And in broad strokes, there's mass commercial agriculture, which produces most of the food and frequently depends on scale, risk tools, financing, policy architecture. And then there's the broad farm category, which includes more than 1 million operations that function more like household land strategies than profit-maximizing food businesses. Chapter 3, monetizing dirt. Now at this point, it becomes tempting to tell a simple story. Most farms lose money because they're small, inefficient, or a lifestyle choice. Real farming is the big operations. The rest is all just theater. But it's only half the story, because the other half is even for many of the real farms, the ones generating millions of dollars in annual revenue, the most important return is increasingly not on the income statement, it's on their farm's balance sheet.
Well, that sounds boring.
And for those of you guys who don't have a background in accounting, just the quick difference between an income statement and a balance sheet. The income statement is basically saying how much money did you make in a period of time, whether it be this month or this quarter or this year. And meanwhile, the balance sheet is really this ongoing statement that says what are the assets that business has, as well as what are the liabilities and shareholder equity that business has. And like it ultimately should tally out and balance out. And so if you're looking at the farm sector assets, you'll notice that they've grown dramatically over recent decades. And the real estate is the engine for that growth. Land and its attachments dominate the balance sheets of farming operations. In recent years, the USDA's own forecasts have put farm real estate at roughly 83% of total farm sector assets. And the dollar magnitude is just enormous. It's in the trillions. And so when 80+% of assets are real estate, farm wealth becomes less like a working capital story and more like a real estate story. You can operate within thin margins or even negative cash flows and still become wealthier year after year because you're holding on to an appreciating asset. Now, if you look at this chart here, it's probably the cleanest illustration of this shift. You see, what we've got is one line that's volatile. That's the income. It whipsaws. But the other line, it just mostly keeps going up. That land value marches upward from decade to decade. This right here, my friends, is the true story of modern agriculture in a single picture. Cash flow volatility sitting atop steadily appreciating collateral. The visual is slightly deceptive because it puts a flow or annual income next to a stock, like an ongoing asset value, and it indexes both to the same baseline. But that's not a flaw, it's actually kind of the point. This can help explain why the sector can feel simultaneously fragile and stable. It's fragile because operating margins can be crushed by input costs and weather and prices and debt service. Yet it's stable because land values and the policy architecture that supports them, it actually provides a durable foundation. And all of this can actually help explain why farms can persist even when their yearly numbers look so bad. A household can tolerate regular operating losses in the 5 figures if the farm is also a long-term duration asset position that's going to appreciate significantly over a period of time. Fun fact about me, before I became a farmer and a content creator, I used to work in the investment industry. And again, I'm going to give you just another example of this, just playing out with my own self, just putting myself out there. And I know I'm going to get so much hate in the comments for putting this out here, but I feel like if we can't honestly talk about this stuff, it's just going to keep getting swept under the rug and people are going to keep getting duped. So when I bought this farm in 2016, so about a decade ago, we paid $350,000 for the entire parcel. So all of the land, the outbuildings. And now over the past decade, we have definitely made improvements to the land over the years. We did a massive renovation on our house that was built like in the 1830s. We built structures like even this barn that I'm recording this video in for you guys. And so we've done things to add value to the land. But even if you're not even looking at a reappraisal and you're just simply going off of online estimates based on comparable sales, based on what we had versus where we're at, this place is roughly worth $1 million now. And so now think about that. After a decade, the value of this farm has increased 3 times, 300% increase, if you will. And that's got nothing to do with any improvements that we've made. That's got nothing to do with the business that we now have on the farm. That is solely just based on the fact that we bought it and we've been holding on to it. And so sure, I made $17,000 selling farm products last year, but the real value that I'm building, like if I ever want to go retire, sits within the land itself. And all of these facts, whether you're looking at just my personal situation or agriculture in the United States, either way that you're looking at it, this is where agriculture actually collides with another American story, rent.
Seasons of love.
A large share of farmland is rented. In fact, it might even be 525,600 acres. Maybe not. A large share of farmland is rented, and most rented farmland in America is owned by non-operator landlords, meaning people who own land used for farming but are actually not farming it themselves. That fact changes the distribution of returns. Operating profits go to the operator when they exist. Land appreciation and rental income, they all flow to whoever owns the land. And when the land is held by non-operators, whether that be retired farmers, heirs, investors, absentee owners, the farm economy becomes less about farmers and more about landholders. And so again, in other words, when we're talking about farming in America, oftentimes we're talking about real estate. In many ways, this is where farming has almost become like the modern car wash industry.
What you talking about, Willis?
And yes, this one's going to need a little bit of an explanation. You see, in most industries, the product is the point. In land-heavy industries, though, the product can become the way you carry the asset. Like you probably noticed over the last few years, right? It seems like car washes like sprung up all over the place. And that's because a modern express car wash is often less about the actual business of keeping cars clean, and it's much more about a practical way to monetize a piece of land and hang on to it at the same time, hoping that it gains value and appreciates for whatever's coming next. You know, the wash itself, it takes very little money to stand it up, relatively small investment. It takes very little money to operate it and keep it profitable. It generates a steady income so that you can pay taxes and maybe make a tidy little profit. But then that parcel of land can sit there and it can accrue value. And so then when the value of the land hits a certain point, the owners can sell that parcel of land, the car wash gets torn down, and whatever is next gets put up in this prime location. And so that steady cash flow matters because it lowers the price of waiting for real estate prices to appreciate. And so you've got all of the holding costs covered while that land climbs in value. And then when you look at farmland, especially the ones near growth and amenity markets, like the really hot real estate places, the math is kind of the same. Farm real estate is the dominant asset. Again, around 83% of total farm assets. So an operation can be thin on cash and be still sitting on a lot of wealth. But wealth in the ground doesn't cover your bills on the calendar, which is how you get cash poor and asset rich. It's this recurring condition that a lot of farm families face. Car washes and farms, they are these cash flowing wrappers around the land, the day-to-day business that keeps the lights on and roughly pays the carrying costs. Meanwhile, the owners are just waiting for that one big real estate payday somewhere further down the road. But in order for those location economics to take over, you've got to have a stable real estate market. And those stable real estate values become critical for the success of American farms.
Too often, people think about a farmer's problems as being distant and remote and not having a lot to do with the rest of us.
Very much, and welcome to Farm Aid, the concert for America.
What we're trying to do today, other than raise money to aid the farmers across America, is to inform the public about the plight of the American farmer.
Today, our family farms are threatened.
The fact is, there's a strong link between the health and prosperity of the farm and the lives and jobs of many city people.
Willie Nelson's here because he cares about the little people.
The choices you make about your food will determine the fate of family farmers and the future of food in America.
I've been watching the farmers now for about 5 or 6 years, and I've watched them lose their homes, and some of them are friends.
Chapter 4, Why the 1980s Gave Us PTSD. If you want to understand why U.S. agriculture is so obsessed with stability, you've got to go back to the last time the floor really gave out.
No sale! No sale! The farm financial crisis has created visible turmoil.
The 1980s farm crisis wasn't primarily a story about bad farmers. It was a story about leverage meeting a collapsing asset. In the late 1970s, farmland had inflated in value. Credit was available, and many people, farm families and lenders alike, treated land as something that moved only in one direction. So when the macro environment turned, interest rates rose, exports weakened, commodity prices fell, suddenly all of these land values stopped being a comforting assumption and they became a threat. Because when land is your main asset and your main collateral for a lot of loans you take on, a downturn doesn't just feel like a recession. It feels like a swift kick in the testicles. Essentially what was happening like in the 70s and even in the early 80s was like these farm families who had a lot of land, they were taking out loans and using that land as collateral for those loans. And so when you hear horror stories about people losing the farm, that was one very easy way to lose the farm to the bank. You take a loan out against the land using the land as collateral, but when the collateral value drops, loan covenants tighten, refinancing gets harder, a bad operating year can turn into a forced sale year. And forced sales can end up pushing land values down even further because you've got greater market liquidity. It's a loop, part financial, part psychological. And in the 1980s, rural America lived through this in public.
And that's part of the public relations problem we have because we're just family farmers and we're facing an agricultural industrial complex with a lot of public relations money.
So many people read the newspaper about the farm crisis, but so many of them don't know what's going on.
Like them. Who's them?
The East Coasters, the West Coasters, only in Iowa and the Midwestern states, we feel it, but nobody else can seem to sympathize with that.
You mean the big city jakes don't know what's going on?
They think that food comes from the grocery store, not the farm.
All of us did not get in our debt situation because of overspending on expensive land. It's here now. We need our debts restructured. We need our interest rates down. We need bankers that will work with us to get us out of this situation.
The lesson that got burned into the system wasn't that farmers need help. It was sharper than that. It was that if farmland values fall far enough, solvency can disappear fast, even for the operators who are competent and hardworking. Take a look at the farm sector's debt-to-asset ratio. The debt-to-asset ratio isn't just about how indebted farmers are. It's also a measure of how much the sector is leaning on its asset base, an asset base that's dominated by real estate. So after the early 1990s, the ratio trends down for a long stretch of time, but then it begins rising again in 2012, peaking around 2020, easing up, and then ticking back upward again as we get into the mid-2020s where we are today. You see, in a land-heavy sector, this ratio can improve for a lot of different reasons that don't feel like improvement on the ground. If land values rise, total assets also rise, and the ratio can fall even if debt stays the same or even grows modestly. The balance sheet can look stronger while the operator's cash position might be getting a lot tighter. So when you hear like secretaries of agriculture talking about how farm balance sheets are healthy, it's worth asking, healthy in what sense? Healthy because they're operating at profits and they're robust and stable, or healthy because the land values keep going up? You know, that distinction matters because it tells you what the system is really protecting. This is why the farm safety net starts to look less like a kindness and more like infrastructure. And that's why I would actually argue that if you look at the farm bailouts that have happened in recent years, particularly as a result of Trump's trade wars, it looks a lot more like the asset bailouts that happened in the financial sector in 2008, 2009 with things like TARP. Because all the government's essentially doing is giving cash to people to stabilize the assets that they hold because those asset values are dropping. And they want to stabilize the assets of the industry, so they provide a backstop. Because liquidation years are the ones that don't just change farmers' lives. They change property values and land markets. And land markets in modern U.S. agriculture are the beating heart of the entire business model. The 1980s crisis was a classic leverage and asset price doom loop. Land values fell sharply, debt became crushing, loan losses spread from the farms to the farm credit institutions, families lost farms, lenders failed, Willie Nelson played concerts. It became a rural financial crisis because at the time, the farms themselves were the financial and industrial backbones of a lot of rural America.
We're not just trying to save the family farm. We're trying to save America. We're setting ourselves on fire out here because we're trying to warn this nation of a tidal wave that has already come across us, coming across our small towns, and it's coming your way, whether you want to know it or not.
And so all of that chaos left an institutional scar.
We're not asking for the government to give us money. I don't want your damn charity. I don't want your subsidies. I want a price in the market.
It taught policymakers and lenders and farm families a lesson that modern U.S. agriculture has been quietly organized to avoid repeating. That's why the farm crises of the last couple of years really don't look anything like the 1980s, even though a lot of people who are telling the stories about farm crises and the need for bailouts will tell you otherwise.
Well, this is the worst time since the 80s, and I was farming in the 80s, where farmers were going out of business.
I personally think that story specifically has also misled so much of our agricultural policymaking for pretty much most of my entire lifetime.
How, because of the investments we're making, we're restoring hope and opportunities so family farms can stay in the family.
And to keep family farms in the family.
This has been a huge help for our family farms and has allowed them to continue to operate through this pandemic.
That on family farms across this great state of yours, you're hearing yet another presidential race where candidates have to talk about family farms being lost.
We're losing our farms at a rapid rate, and he has no commitment to keep family farms in the family.
Like, again, take a good look at that farm sector debt-to-asset ratio. Debt-to-asset ratios can look fine overall, even when farmers are struggling, because rising land values make total assets look bigger. And in a sector focused on land, the balance sheet can seem healthy even if that cash flow is getting worse and worse.
We're not insensitive to your problem. Yes, we are insensitive to our problem.
Farmers don't want taxpayers' money to bail us out. We want a fair and just price. And the economic system is doing this to us. The farmers aren't failing America. The economic system is failing the business and the farmer.
This policy infrastructure isn't just in terms of dealing with like a trade war like we've seen in recent years. Just the federal crop insurance program is another example of a program really designed to protect real estate assets above all else. Even though the story is often focused on saying that we don't want to make you, the consumer, pay more at the grocery store, and that's why this bailout is needed, that's usually not the case. Federal crop insurance is sold through private insurers, but the government subsidizes a lot of the premiums and shares the underwriting risk through the reinsurance structure of those programs. Premium subsidies vary by coverage level and policy type, but the broad principle is consistent. The public absorbs a meaningful share of the cost of insuring farm revenue against disaster. That means stable food prices and stable farm operations. And in theory, it's an important ingredient for a stable society. Bear with me here for a moment, because understanding an insurance program like this is a perfect example of showing what our agricultural policies of today are really protecting. Depending on the product, the government paid portion of insurance premiums can be massive. Enterprise and whole farm structures can receive particularly high subsidy rates at common coverage levels. Catastrophic coverage premiums are fully subsidized. Farmers still pay an administrative fee, but most of those premiums are covered elsewhere. And higher coverage levels receive partial subsidies that still meaningfully reduce the farmer-paid cost. This matters for the business model because it turns existential risk into a smaller, manageable risk. It reduces the likelihood that the farm's worst year will force that farm into liquidation. And that, in turn, supports collateral values. A world where revenue collapse is insured and it takes that risk off the table is a world where land values look a whole heck of a lot safer. In any normal investing market, risk is the price of admission. You don't earn outsized returns by playing it safe. You earn them by swallowing uncertainty.
No risk, no reward, right?
That is why the riskiest assets and the riskiest investments often offer the highest payoff. Weather, commodity swings, interest rates, demand shocks, and the very real possibility that one bad year could force you to sell at the worst possible time, those are all risks that have traditionally existed in agriculture. But when a system steadily trims the downside, when the worst outcomes are insured, subsidized, or quietly backstopped, the shape of the bet changes. The asset starts behaving less like a volatile business input and more like a protected store of value. And for farmland, that matters because land is more than a tool of production. It also holds value on its own and can be used for many other purposes well beyond farming. If agricultural revenue collapse is partially socialized through insurance and emergency support, the likelihood of forced sales falls. Credit looks safer, and land prices can stay firmer than they would in a fully exposed market. Farm incomes can still whip all over the place and go kind of crazy, but you've changed who bears the tail risk. And once that tail risk moves off the private balance sheet, it's not just help for farmers. It's a structural support for the investment case underlying American farmland. Which is why, if you look at the trend in the investment and asset management industries over the last 40 years, you will notice that there has been a significant shift of investable assets going into farmland. You know, you've heard the headlines of billionaires investing in farmland and all sorts of trusts investing in farmland and all of these crazy farmland investments happening overall. And so often I feel like the headlines get misconstrued into this scary story of Bill Gates is trying to control the food supply in America.
Billionaires are buying up farmland all across America, including Bill Gates, Jeff Bezos, and Ted Turner.
What does the computer boy want with all that land?
These billionaires now own millions of acres.
Control the food, control the people. That's one reason why I'm up here growing 90% plus of our food.
But I don't actually think that that's the case. I actually think so much of this is rooted in the basic fundamental idea of, wow, this is a very, very low risk asset class that has a pretty significant return. And in fact, the risk adjusted return is better than a whole heck of a lot of other asset classes out there. And so if I'm looking for a place to park my millions and billions of dollars, why not buy a farm? And, just full disclosure, that was not my motivation, but I feel like I've sort of backed into that strategy on accident.
But love is here, Goldshell Farms.
So put simply, crop insurance isn't just about helping farmers get through bad weather. It also plays a role in the housing crisis. While the crop insurance didn't create zoning rules or building delays, and it's not the main cause of high housing costs, it does help drive up land prices. And when policies make real estate less risky, prices will go up. And the expensive land makes it harder to build affordable homes. You know, this is where I get all Charlie Kelly on you guys and explain how crop insurance is keeping you from buying your first home. All of this is the part of the machinery that keeps the farm sector's asset base from entering a downward spiral, like when we saw shocks in the 1980s. And while that stability might be good for some, it actually might not be good for everybody. Chapter 5, the age of emergency. In 2025, the term farm bailout returned to the national vocabulary in the most predictable way possible.
White House announcing a massive $12 billion federal bailout for American farmers. It comes after China boycotted American farm products, including soybeans, this fall because of President Trump's tariffs.
And it'll help them continue their efforts to lower food prices for American families. Farmers are an indispensable national asset, part of the backbone of America.
You left yourself open, Dad.
You know, if you look at the last decade in the United States and you only follow this story through the headlines, it's easy to treat each episode as a one-off. Pandemic aid was a one-off. Disaster aid was a one-off. Trade mitigation was a one-off. Inflation relief, supply chain relief, bridge relief. Sure, all of these things were one-offs. But when you put them all together and you zoom out and you actually plot what USDA payments have looked like over the past decade, you see something else. The one-offs have become the foundation of the industry. Before 2020, government payments are a mix of some very familiar categories. conservation money, baseline programs, residuals. But then after 2020, the composition flips dramatically. The ad hoc / emergency slice becomes the majority share of agricultural payments. And not just in like one weird anomalous year that we have a pandemic, but repeatedly. The main point isn't just the size of the payments, but that more and more of them now come in the form of an emergency program. And even though these emergency events are supposed to be unpredictable and unexpected, if you do it enough times, the markets and the people who drive those markets start to expect them and they plan for them accordingly.
Don't feed the bear!
And I think this is where we've spent so long as a country propping up real estate values and real estate prices that if the US government were ever to step aside and say, no, we're not going to do this, the market itself would panic. And that in and of itself would drive down asset prices in such a significant way that it would become its own news story. It's like we've been feeding wildlife for so long, they don't know how to forage for themselves at this point. Really all of this comes down to how a modern government manages shocks, pandemic shocks, disaster shocks, supply chain shocks, and yes, even policy shocks. Agriculture has always sit in this weird spot because food is uniquely sensitive and it's such a fundamental thing that people need to survive. And the scary stories that get told when you have potential food insecurity.
We are 9 meals away from anarchy.
Drives action in a much more significant way than a whole lot of other industries, like, the car industry, right? And even though, yes, we were bailing out the car industry in the late 2000s, we don't bail out the car industry the same way we bail out agriculture. I think so often these farm bailouts get sold as a way to stabilize your grocery prices. But do you really want to see bailout payments going to folks like Bill Gates or Warren Buffett or any of the other millionaires and billionaires who own significant chunks of farmland? And the answer is no. And while those direct payments might not be going directly into Bill Gates's pocket, what those direct payments are doing are stabilizing the assets that a person like Bill Gates owns. And so, I don't know, I feel like this doesn't come up when we're talking about agricultural bailouts ever. It gets dusted aside because it's a very complicated thing. I mean, if you're still hanging with me in this long esoteric rant about subsidies and insurance and real estate values and balance sheets, if you're still with me on this one, maybe you're just starting to appreciate it. But this is not the kind of idea that is easily communicated in a news headline or a news story. It's so much easier for the news headline or the news story to gravitate to a story about this one farmer who's struggling, and that anecdote becomes the mental model and image in most American voters' mind. But the reality is that is not the case, my friends. At this point, if the farm sector starts to unravel, it doesn't stay neatly contained in rural America. It hits banks, it hits land markets, it hits input suppliers, it hits the whole ecosystem that in practice is just too big and too symbolically important to let it fail in a chaotic way. Or maybe that's just the story we're telling ourselves. Again, people love to say that farm subsidies exist so that your grocery bill stays sane. But does anybody out there actually believe that their grocery prices are sane these days?
Do you want to know why Americans are struggling? Probably because the price of groceries are insane.
1 pound of ground beef is now more than the federal minimum wage, guys.
Bro, I just spent over $500 at Kroger. Yeah, we were supposed to get lower grocery prices and lower gas prices.
Anyone else, when they're coming to buy groceries, get a panic attack?
Chapter 6, Little House on the Spreadsheet. If you follow the numbers long enough, you're gonna eventually arrive at a cultural problem. The way Americans talk about farms has not kept pace with how farms function.
Family farms are the backbone of this country.
Farmers are the stewards of the land. But our American farmers are heroes too.
Our farmers are the best of America, embodying that great American spirit.
I stand here today to thank American farmers who are the breadbasket of democracy.
Through fires, floods, and freezing weather, we will always support our great American farmers.
So God made a farmer.
We argue about agriculture through a very narrow moral lens.
Somebody to seed, weed, feed, breed, and rake, and disc, and plow, and plant, and tie the fleece, and strain the milk, and replenish the self-feeder, and finish a hard week's work with a 5-mile drive to church.
While the underlying structure has drifted towards finance, risk management, and consolidation, we speak as if the farmer is one archetype, and then we design policy and culture around that archetype. But the distance between the story and the structure is not accidental. Farmer is one of the most powerful moral identities in American culture. It's also a marketing strategy.
You know, it hits you the second you walk into a grocery store, right? Brightly lit, rows and rows of packaged products, and every time you look at one of those products and you look at one of the logos, you see happy cows or big green fields like this one, and you start to look at it and you start to say, well, is this pasture, is this field, is this actually where this ranch dressing, seasoning actually came from? And the answer is most certainly no. But it's imagery like that that's like a direct line to the heart for people, and it harkens back to older, simpler times when people's food came from a much simpler place. And so it's not by accident that large food conglomerates which use industrial food production often shroud themselves in marketing that takes the images and nostalgia of old-timey small farms, and then they'll use that to sell something like Go-Gurts.
Restaurant culture, particularly farm-to-table restaurant culture, sells an image of agriculture that is ethical theater, knowing where your food comes from as this, secular absolution. I made a whole long video on that if you're curious. But the system itself contains multiple business models under a single word. Commodity grain and oilseed farms whose economics are tied to global prices, export markets, input costs, and risk management tools. You've got dairy and beef systems with distinct capital structures and different consolidation pressures. There's all the contract growers out there whose farm can resemble a fee-for-service business with a heavy capital investment and limited pricing power. And then you've got things like my operation, right, where we're a direct-to-consumer specialty farm that looks more like high-end retail with high labor, often higher margins per unit, and demand that is sensitive to the local markets and affluence. And then you even have the lifestyle and retirement estate farms, where the return is often identity, tax treatment, land appreciation, or simply the continuation of a family asset. When Americans argue about agriculture without distinguishing between these different business models, they end up doing policy analysis with a children's book vocabulary. The debate becomes moral theater. And as we keep learning over and over and over again in these modern United States of America, moral theater has consequences. And when it comes to farms, the moral theater shapes a whole heck of a lot. And once you see that, you start to notice that there's another quiet engine underneath the whole system.
Death and taxes to be exact.
Chapter 7, the moral packaging of inheritance. When somebody inherits $2 million in stocks or bonds, we often label them as a trustafarian. But if they were to inherit $2 million worth of farmland, we call them family farmers. And for years, I've often asked, why is there that double standard? And now I know I'm going to catch flack in the comments of this video for this lukewarm take, but I think that inheriting farmland is no different than inheriting shares in a stock or, having money in a mutual fund. The only difference is that we gild one and we grumble about the other. None of this stuff requires conspiracy thinking, and it doesn't require the assumption that farmers are gaming the system. It just simply requires you to recognize that U.S. tax law and U.S. cultural values align in a way that makes holding agricultural land attractive. Just look at the numbers here. The modern shift started with the Economic Recovery Tax Act of 1981, which phased in a much larger unified credit. It raised the filing threshold to $600,000 by 1987. It stepped down the maximum estate tax rate to 50% by 1985, and it created unlimited marital deductions, allowing assets, including land, to pass to a surviving spouse without estate tax until the second death. And then from there, the direction for most estate tax is really only one way. The exemptions rise and the top rates fall. The exemption was $675,000 in 2000, a 55% top rate. And then that exemption went up to $13.6 million by 2024 with a 40% top rate, shrinking the universe of estates that owe anything at all. In 2025, the exemption was almost $14 million, and the 2025 One Big Dumb Bill Act set it at $15 million for 2026, and it basically indexed it going forward. It ultimately means that $30 million is the estate tax threshold for married couples when you account for all the portability. Like, can you honestly say that somebody who has $30 million of marital assets is just a humble family farmer? I mean, it's gotten ridiculous. And when you layer on top the farm-specific provisions that Congress kept in place, things like special use valuation that lets qualifying farmland be valued by its farm use rather than the full market value, plus the deferral options for closely held businesses, like things that are held within just a small number of people. And all of this ladders up to mean that the old political image of heirs having to be forced to sell acreage just to pay off the IRS, it becomes statistically the exception. Land that appreciates can generate wealth without showing up as annual income. Depreciation can reduce taxable income even further when cash flow is stronger. Losses can offset other income in certain circumstances. Estate planning can make land a powerful intergenerational asset. I say all of this too, like there are certain things like in terms of the current use program in Vermont and some conservation easements we have on our land, like I benefit from this. I'm talking about this not because I don't benefit from this. I'm talking about this because I don't think enough people know about it. And I also talk about all of this stuff because I think so much of these rules and like particularly the inheritance stuff is further promoting wealth inequality, and it's also distorting what a good profitable farm looks like. Because many farm strategies aren't optimized for operating profit alone. They're optimized for a blended return. This is not an attack either. Please don't hear it at that. It's just simply a very honest description of what farmland is and how it performs as an investable asset class. The part that's hard to admit, because it really clashes with the little house version of farming that we all carry around, it's that the tax code doesn't touch agriculture. It shapes what agriculture becomes. And that right there is the real punchline of the trust fund kid versus the family farmer. It's a double standard. We're not just judging money differently, we're judging assets differently based on whether they come wrapped in a moral package. Farmland gets to be both an investable store of wealth and a sacred national symbol all at the same time. Chapter 8, the financial architecture behind the home sweet home. So why hasn't the food system in the United States collapsed? Because U.S. agriculture is not held up by the annual operating profits of 2 million independent businesses. It's held up by a layered, high-tensile structure of socialized risk and private asset appreciation.
Publicly subsidized, privately profitable, the anthem of the upper tier, puppeteer, untouchable.
The snow just fell off the roof there. And now, before I leave you guys, I should probably directly address where I personally sit in all of this, because it's really easy to make a video like this and point at other people, but I also need to be looking at myself and looking in the mirror here. You know, as I mentioned earlier, my wife and I, we bought this farm about a decade ago. The value of it has increased dramatically. Even though I do use this farm to both produce agriculture and agricultural products as well as earn my living. I mean, I do earn most of my living from making videos like this one, which most of those videos are about me working on the farm. I don't talk about the fact that, you know, we've essentially tripled our investment in this property as a way to brag. It's just to underline the argument that I've made throughout this whole video. On paper, the farm business side of my life is not the clean success story that people will imagine when they picture a profitable farm. The reliable money has come from off-farm channels, especially like I said, the social media stuff and things like writing books. If you enjoyed this video, please buy my book. There's audio, print, digital. It's all available right down below. But beyond the income I've generated from making YouTube videos, I have made a significant return on a very quiet one, land appreciation. And that's what I mean when I say that many farms are not designed economically to deliver their returns through annual operating profits. They always deliver them as this blend of some cash flow, some outside income, and compounding assets that will increase significantly over time. And I know talking about this makes people uncomfortable, partly because it reveals something we don't like to admit. The family farm is often also an asset strategy, and even when nobody is trying to game the system, it plays out that way. Sometimes it's just the math you walk into when you buy land in a country where land is protected, subsidized, and culturally sanctified. But if we can't talk about the structure because it implicates us, because we benefit from it, or because it complicates the moral of the story, then we're just going to be stuck arguing about myths. And I think that's a big part of the problem in American society today, in American politics. We spend so much time arguing about the narratives versus actually digging deep and looking at what the data says. And so I hope you guys have enjoyed this video, I know this is me kind of geeking out on something that probably most people don't care about, but I think it's significantly important when we think about the future of farming in America to think about a lot of the things that I've discussed today. If you guys are looking for something else to watch, check out one of these videos, and you can also buy my book. So thank you for watching, everybody.